Alrighty traders, George here. Sunday evening, futures markets are open. Time for a look at the week ahead. I've got some real important stuff to show you. Before I move on to the charts, I need to make mention, A, that we still have the red zone markets in play here, and we'll be talking about that more in the live room. And also the time of year that we've had these big sell-offs in the equity markets is unique. We typically don't have big sell-offs in August, but one thing that is for sure is we're coming up on Labor Day. And this is one of the key holidays in the market, and the second into the third week of Labor Day is a perfect time to go live after you've spent time learning your new setups and signals as a new DST course member. All right, so you've been watching these videos, you've seen all these great moves on the balance beam, all the performance of the DSR model intraday, ongoing month to month to month, all built on watching the same setups and signals. That's the belief. Use this 2-week time to put in the right work, doing the right repetitions, being focused so that you can respond subconsciously in mid-September and take your trading out of the gutter and no looking back. Long-term consistent profitability. Okay, it's absolutely within your reach. That's the whole point of me doing these videos, is to show that to you and shake you into snapping out of your old habits. All right, so red zone markets still with us. 2-week stint here. Perfect time to get going with your trading career. Use the link at the bottom of the video to make that happen. And then for the week ahead, what's important to look at? I'll show you. For starters, let's go to, I happen to have gold marked up here. The last setup I showed you was long at 1107.40s. Went in favor in a big way, broke down below this balance beam through this air pocket and then found a bounce at 1120s. Where we are right now, I've just come up with a grid to show you guys. So based on 1133s, if we get below 1130, that's likely going to drive us down a fair bit here. So below 1130s, look for a minimum $5 to target 1, and then down quite a bit more here to sub 1120s for target 2. We start trading below that level would be very negative, and that was what was the initial resistance area here on this impulse, and then support here. If that's broken down here, we're very likely going to drop at least 20 bucks to the sub 1100 level. So that's something to watch there. To the bull side, if we stay in the middle of this air pocket here, so it's a little precarious, but this balance beam right here, you see the bulls trade over this level and they've got it right where they need it. So at 1133.50s, we need to move up a couple of bucks. At 1133.60s to be long, and then the chance to go up to retest the floor of each of these 3 balance beams here. That is like clockwork. The bulls just need to get it over 1136 with some conviction there, and these things are going to be a lock, at least the first 2. And then a good chance of driving up here. I've pushed up a little bit over this swing here to give a little bit more weight to the fact that we would be going up to where we didn't actually hit before, and we've already made a good bull impulse here. So when you get up here, assuming we're going to start trading over 1160s, you can treat this area here as aggressive, moving up anywhere from about 1168s onwards. But if we start trading over this level here, the bulls are going to have a shot at moving it back up even more. Here's oil, another critical market to be on top of. If you want to be a position trader, you need to know your markets. Where a lot of traders fail is they look at too many markets. Okay, don't do that. Start out with one market and get to know it very well. If you take on a second market, make sure it's a non-correlated market. As oil goes, it's a great day trade and position trade market. And what I'll do on this one is I'm going to go back to where I was, 235-minute chart. And I've got a bunch of price points outlined here that have become very relevant only in the very recent past. Friday, we had a great bull impulse here taking us over 42. We were actually looking for this break lower, below 45s to 42, and then further. Since then, we've had a sharp recovery over 42s, and what I'm looking at right now is we're at 44.50s. Okay, so at 44.50s, I'm looking to see if we'll pull back more and get a bounce at 43.45s. If we do, I'll look for 44.45 and 44.90 as the 2 upside targets. That's what this means here. We pull back, then we bounce. If we trade over 44.60s, that's putting on a trip at least $1.80 higher, $1,800 per one contract higher to 47.80s. If we drop below 43.45s on a pullback to the zone here, certainly lower than 43s. We'll see at least a dollar pullback to 42s even. And we get below 42, we're going to drop to minimum to 40, and below 40, a minimum of 50 to 39.50. Sorry, those aren't more exotic, but that's what they are. But the main thing I'm looking for here is, will this bull energy here really be a bullish impulse, or that Friday pop, is that just vapor and we're going to collapse back down below 42s? I'll be ready for it either way. Those are the key resonant price points to watch. For the Nasdaq, the most important market to watch right now for the equities as it leads the markets. Okay, so the Dow and the Nasdaq sort of at opposite ends of their realities, and the Nasdaq with a very strong recovery after breaking into a fourth target zone down here. This is something that we had already been ready for, targets 1, 2, 3, and then into the last zone here. On a recovery over this level here, that created the big bull bounce, the whole pass through. Now, where we are right now, we're at a zone where if the bears want to step on this, we're driving into a higher trading commitment area. Just below us here, there was not as much trading commitment, but this is a spot now where the bears could step on this thing. So I want to see if they're going to do that. If they are, pulling to 42.25s would be an area I'd look to see if we get a good bounce, which would take us back to 4300s. If we break below 42.20s, we're likely going to drop to 41.65s, below 41.65s down to about 40.90 or so. The main thing I would look for on a pullback is that the bull bounce continues. I would weight the trade scenarios to the bull bounces at 42.20s or 41.65s with moves back up to that level, 42.20 or to 4300. If the bulls take it over 43.20s, they got a green light to go to 4400. That's 80 points for you right there. 4400, key floor that was broken. If the bears don't do something about it there, we're going to go up to 44.65s, and over that, we're going to retest the highs here altogether, and these are still relevant price points to the north, FYI. The higher up price goes here, the more this energy is diffused, and getting over 44.65s is pretty much a lock to retest the highs up here. But near term, this is the battle that I will look to see pan out. It should happen in the next day or two, and basically trading over 43.20s or down to 42.20s. That's the initial move and what will happen at either of those areas. So ongoing, these balance beam setups are things that you can learn to follow, learn to see, and basically do your own homework. Teach someone to fish. If you like fishing, show up to the live room. Okay, use the link at the bottom of the video. I'm going to be day trading the DSR models, and I'm going to be showing you more stuff on the balance beam models. This 2-week stint here, this is the time to sign up and get your ducks in a row, go live mid-September, and always think about what the losing traders and the rookie traders are doing. How about we don't do what they're doing? They're going to try and trade their rear end off starting tomorrow using every shred of margin they can get a hold of, and they clearly have not had time to change their repetitions, their beliefs, to put their negative responses behind them and get the emotion cleared out. They simply don't have time to do it. So you can think about trading like a business and think about repetitions based on what you see, factual evidence, dissociating yourself from the emotion and toil that most traders face, and really thinking more about a lifestyle that you can get from your trading. Then you need to be a part of the DST course, and we're going to be live Tuesday morning. And until then, we'll see you back in the live room.